Right. Okay. So, hello, guys. I'm happy to see you back on my channel. My name is Simeon, and as I always say, I'm not a trading guru. I am someone far more useful. I am a Forex and CFDs industry insider. For the last 10 years, I worked for top global Forex and CFD brokers. And that obviously gave me a lot of knowledge and a lot of information that I gathered, right, for that decade. So now I share that information and I'm helping my viewers and my clients because I do one on one educational sessions. I provide that type of education anyway. So I'm helping, let's say, now my clients, my viewers, to access the capital markets, to understand trading, because my last 10 years was my job. My main job was to help novice traders, probably people just like you, to get started, to understand what is trading about, to understand what kind of risk involved, okay, how the trading platform works, okay, how they make money, how the broker make money, and so on. So, like I said, I'm running my channel here, and on my channel, I'm helping a lot of people to understand, obviously, what trading consists of, right? I mean, how important to understand what class of assets you trade, what is your leverage, okay, what your risk appetites, your profits, and stuff. So, all that is very important, and I'm doing these videos on my channel. So, if you are not subscribed yet, please subscribe to my channel here so that you do not miss any videos that will be coming soon, as well as the videos that already been released. Now, also subscribe to my Telegram channel. You can see the QR code on that side. Right, so yeah, just connect there with me. Okay, I'm providing the most essential news that's shaking the markets, and that's exactly what we're gonna do today. We're gonna be observing the market again. So we checked some obviously market movements yesterday, and we're gonna do it again today to see what's going on. There is a lot of things, by the way, happening. Okay, so that's what you need to get in your mind. That's you can have as an advantage to trade. So. Moving forward, we're gonna go again to look at my screen and then observe the markets together. Open some trades like we did yesterday. Okay, based on the opportunities we're gonna find. So let's do it now. Okay, and let me just simply go here now. So now we're coming to my screen, and what I'd like you to do is just to come here, right? And then we're gonna look at the market. So the first thing we're gonna go to investing.com, as I always say, right? Investing.com is a good place for you to go in order for you to find information, to find news, market opportunities, and what's shaking the market. So if we just quickly observe what's going on, okay, let's look at this. Look, indices over here, okay, or we can look even here, right? So look, markets, indices. So you can see here Dow Jones, S&P, Nasdaq, right? So majority of the indices in the U.S. basically gone up yesterday. Okay, so there's something that's is still not open, but that's the performance from yesterday. But if we look at indices futures, that's something that is open now. Okay, and we can see that today the indexes are down. You see, American index, right? The ones that we've been checking just now. Okay, from yesterday they're gone up, today they're gone down. All right, so this is obviously what we can say about indices. So indices are slightly down today. Now let's move forward to okay, stocks is something that's moved yesterday, right? You can see the performance from yesterday. Now the markets are closed. The U.S. stock market will be opening in about 4.5 hours. So there's not much to look at. Now look at commodities. So real-time commodities, we can see that gold gone up today by $4. We can see that silver gone up today by 84 cents, like 1%. But what is important to look at is actually crude oil. You see, gone about 128%, like almost $1, and Brent oil. So this is the very important to understand why the price of oil keeps going, because we're gonna check that together. Let's say if we look at, you know what? Let's go here and we're gonna go to Trading View. So you see, oil is going up, and the oil is going up based on tensions between U.S. and Iran. They say that it's 90% now chances that the invasion or the attack of U.S. will happen, okay, and will happen soon, maybe even this weekend. That's what they say. So look at this, right? Oil goes up these days very, very, yeah, very much. Look, I'm gonna put that, let's say, on a daily basis, okay, daily chart. So you see, in the last 2 days, oil prices gone up from $66 to 70. So they increased by $4 per barrel, right? That's a huge increase, as you can see. So as you may also notice, right, this is daily, but if we look, let's say, at hourly, Okay, check that out. All right. So on hourly chart, you see also basically it keeps going higher, and that's the trade that we opened yesterday, right? The trade that's closed yesterday, and all the trades from yesterday, by the way, are closed, right? And let me see, right, if we can order history. So yeah, you see what we did, where the other ones filled market buy. So all that's yeah happened. Limits, no market. That's Brent oil. You see, so that one that we traded yesterday on the 18th. So that one also closed, okay, and made some money. So far it's $40 that we made trading some assets that we traded on the last sessions. Now we're gonna go and trade oil again because, like I said, the uncertainty keeps going, and the price for oil may go higher. Right. So look, it's 50 barrels, and 50 barrels require $70 from me to do it again. Okay, I'm gonna go market and I'm gonna put, as I did yesterday, just 10% return. I'm very conservative, so I'm gonna put, let's say, $7, right, to get back in return on that trade. Okay, and I'm gonna click on a buy. So that way, I'm gonna put my trade to run on auto, and it will be delivering me now 10% return. Right, once the oil price will reach $70.75. Now it's $70.57. So it's basically you need to go about like 20 cents higher so that I make my 10% return, right? Now let's move forward. So if we look at investing.com, so we just checked oil, right? And then obviously some other commodities also going higher, right? Let's go to another class of asset, euro, US dollar. So you may see today that euro is slightly higher versus the dollar, okay? Then yeah, Japanese yen is slightly higher than US dollar, right? So, but the movements are very, very moderate, right? Not like you see just 8 pips, 9 pips, right? Very small movements. So there's not much of volatility, I would say, in the currency market and the forex market. Now, that's just for those who are actually like, I don't know, like invested or trading cryptos. You see Bitcoin gone down today by $847, right? So 125%. Now, let's quickly look and observe the news. Okay, what's going on the news section? If there's any news, we're gonna go just for headlines. Okay, and therefore I think it's better just to go for latest. Okay, just to see what's going on. I don't really go, let's say, very deep unless it's something important to read it. But look, hawkish hints in Fed minutes, Walmart to report. European stocks age lower, corporate results continue to flow. Renault gold prices rise to above 5,000 on geopolitical risk. That's what we just said about Iran. Okay, Samsung shares exclusive online cars. US stocks futures slip. Focus on AI worries. Okay, so as you can understand, by going just through the headlines, what you can already get as an idea is that the gold is going up because of the geopolitical risk. Okay, the oil is going up because of geopolitical risk, and we can see that U.S. stocks edge lower, so the U.S. indices are going down. All right, that's what we get out of this, right? Of this, let's say, headlines. So, but there's no much else that we can rely on today. So let's go and check quickly economic calendar. Now, as I'm explaining every single time I'm going on the live session, I'm explaining the news. Economic calendar, economic calendar is one of the most important tools that you must always have in your arsenal. So before you trade or even after you trade, you always come here and check the announcements, the news, and the reports. Okay, that every country releasing every single day. So different reports like unemployment rate, like interest rate decision, okay, like inflation rate and stuff. These reports create a lot of movements, right? Ups and downs in the market. That's a so-called volatility. And that volatility depends on the outcome of the report. You see, sometimes it's coming in green, sometimes it's coming in red and black. So that creates either movements up or down, or doesn't create any movement. And it also depends on the importance. So some reports coming with just 1 star importance. That means that they're not really create a lot of, let's say, movements in the market. Some coming with 2, right? That's moderate importance. But some reports coming with 3, let's say initial job claims. That report's going to be today at 3:30. Okay, so that will something that will be moving the market a lot, and especially it will be moving US dollar versus any other currencies. It will be moving gold, because gold and dollar are correlated directly. So whenever gold goes up, dollar goes down, and vice versa. Okay, so oil will be also correlated and will be moving. So many assets will be moving, and there are many other reports coming at the same time, as you may see. Okay, so when you go and see today, you see crude oil inventories today at 19, right? So basically 7 p.m. my time, right? It will be coming out Cushing crude oil inventory. So it measures you see, if you just go here and you can check, by the way, what is this about? Now, the Energy Information Administration crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by U.S. firms. The level of inventories influences the price of petroleum products, which can have an impact on inflation, right? So if the increase in crude oil inventories is more than expected, right, it implies weaker demand and it's bearish for crude prices. The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and is bullish for crude oil prices. The same can be said if a decline in inventories is more than expected. So you see, this is actually something that's pushing the market price of oil either going up or down because it shows the supply or demand, if there is a supply or if there's a demand, let's say, right, in the US market. And US is one of the biggest economies. So that's why this report's really shaking the markets. And you can see previous reports, okay, they're coming, let's say, every 1 week. Okay, so it's a weekly report, and sometimes it's coming positive, sometimes it's coming negative. So that positivity or negativity creates the volatility, right? The prices going higher or lower. Now, if we look quickly at dollar index, by the way, that measures just the performance of the dollar. So dollar slightly down today. And if we come here to Finvis and we go to Forex, this way we can go and look at 1 day relative performance, right? So day relative performance allows you to actually identify the weakers and let's say the losers, okay, and the winners of the day. So as you may see, New Zealand dollar is the strongest today, right? Then Australian dollar, Canadian dollar, euro. And then you can see the weakest ones today. So if you want to basically identify a good trend, you can take one from the left side, let's say the strongest one, right? And then take the weakest one. So NZDCHF. So if we can go, let's say, on the platform, and we're gonna find here, right, NZDCHF. NZDCHF. Right? So let's find it. NZDCHF in Forex. Okay, so here we go. Now, so if you look at NZDCHF graph, now you see, so NZD goes higher versus Swiss franc, right? Starting from today, okay, from 2 o'clock, as you may see. So it's an upward trend, keeps going, right? So it's a good opportunity to possibly buy it because we can identify that is a very strong upward trend going there for quite some time. And it's coming after a huge drop. You see, the market was dropping from 046.63, all right, and it dropped up to 046.02. So it's dropped significantly, and now the market is going back up again because in the market they say whatever goes up a lot has to go down, and whatever goes down a lot has to go up. So when you see the opportunity to buy from the dip like here or like here, it's a good opportunity to basically, to trade that way. But this is just for you to understand how you can look at the winners and the losers of the day by just simply coming here and just comparing them from one side to another. So, okay, well, look, we just quickly check the market itself. Okay, there's not much that would be interested to look at today, right? Like I said, we just discussed the economic calendar. Now, what I would like to do, and what I always do now, okay, on these sessions, we're going to go to Trade Live. So on investing.com, you have technical summary place where they allow you to take advantage of technical signals. So you have access now to absolutely free of charge signals that are based on a lot of, let's say, AI systems and algorithms that investing.com is implementing there in order for them to provide you with some signals. Now, when you go to trade signals, you always need to set them up based on your strategy. I do something between between short term to medium term. That's why I'm looking at the signals based on 5 minutes, 15 minutes, half an hour, and hourly. So by the time I click apply, now I'm gonna have access to so-called the full ACES strategy. That's what I called it. So you need to find signals only that give you either strong sell or strong buy recommendation on all 4 time frames. So if you see something like strong sell, sell, or buy, strong buy, strong buy, strong buy, or neutral, you don't trade that. So you trade only the ones that have either strong buy or strong sell on all 4 time frames. Now look at this, Euro US dollar strong sell recommendation. let's go and check that together. Euro USD. You see, yeah, Euro US dollar, strong sell recommendation. The last 2 hours, the market price goes down. So why not to sell it? So we're gonna go and sell it. So, okay, by market. So we're gonna go to sell again 5,000, right? And I remind you that we're selling 5,000 because I have just $1,000 on my account. I just made that account of 1,000 to be very, let's say, precise to your usual start. Okay, so you need about 1,000, let's say, to test your waters, right? To test obviously the markets, to have your feet wet and stuff. So using 1,000 is a good, let's say, amount for you to have a strategy developed, right? So look, if we're using 1,000 now, right, I'm gonna go and use only $58, let's say $60 to open a trade. And as I explained always, 5,000 units on Forex stands for 5,000 euros that I'm gonna be selling now. But in order for me to sell 5,000 euros, I only need $58 from my account. And that's because of my leverage. As you can see here, my leverage is 1 to 100. Now, for those that do not understand what leverage is the buying power. So your broker allows you to have a bigger buying power than your investment. So now my buying power is 100 times more than my capital. So that's why in order for me to trade 5,000, I need only $58 to trade 5,000 euros, right? So that's 100 times less than I actually need in order for me to trade it because of my leverage. So now I'm going to be using $60, okay? And as I always do, I'm going to put 10% return. 10% return, okay? And I'm going to go and I'm going to click on a sell because the signal was strong sell. All right, so 10% return will represent $6. And I'm going to go and I'm going to just click on a sell. So that way my trade is going to go live. Okay, here we go. Now, so my trade is going to go, yeah, my trade going live. You see it's opened with a small loss. As I always explain, it's the difference between buy and sell price. So that's called spread. Now that difference is already covered by the market, and it's already gone into plus. Now, look, our trade on oil, I think just closed. You see, Brent oil. Yeah, that's the one. You see, that's trade just closed and delivered us that 10% return. So that's a 20 cents moved, and we made that money. Just as we were speaking, you see, it just closed now at 12:42. So basically, it took it about 5 minutes to deliver 10%. So now that 10%, as I said, was about $6. But this could be $60. This could be $600. This could be $6,000. The same 10%. It all depends on the capital that you invest. So that's basically the way that you want to always think about your investment. It's by the amount you invest and by the amount you want to get back in percentage wise. Okay. So of course I'm just putting $60 to get six. If I would be putting $600, I would be putting $60. All right. So my risk level will be still the same, 10%, let's say, but that 10% would be different amount. So I'm pretty sure it's clear. Now let's move forward. Okay. So the position on Euro US dollar, it's open now. Okay. It's moving towards our goal, right, of making that $6, and it's already 40 cents plus. Now let's look at something else. Okay. Now what we see here, we see GBP USD, right? GBP USD strong sell. Okay. But think about it this way: Euro US dollar strong sell. GBP USD, it's actually you putting yourself in the same situation, right? You're putting yourself against US dollar. So if something happens to US dollar, both of your trades are going to go basically against you, even though this euro and GBP, because they're all connected to one currency. So when you do your trading, you better want to, let's say, diversify. So you don't put, let's say, all the eggs in one basket, like in this scenario in US dollar. So why not to use something that is not connected to the US dollar, for example? Okay, and then you may want to look at something else. For example, I don't know, like euro, Japanese yen, right? But here is strong sell, right? What else we have? GBP, JPY. That is a great one. You see on the strong sell recommendation, GBP, JPY, and let's have a look at this. GBP, JPY. Right, here we go. You see strong sell recommendation, and it actually goes down, okay, quite a lot today. So the trend is going down. So what we're going to do now, we're going to go and click again. Let's say 4,000 pounds is going to be $53, right? We're going to put our take profits again to be 10%, all right? And we're going to click on sell, right? So the recommendation is to sell. So we're going to click on a sell. You see, once you click on a sell, the line here represents the level where your trade will close and your 10% will be delivered to your account. So as you may see here, this trade also opened with a small loss that obviously the commission paid between that buy and sell. Okay, that spread. So now we have that two trades running. Okay, so why not to go and check something else, right? So what else do we have? Euro GBP, right? Euro British pound, strong buy. So that's something that we're going to look also. Okay, Euro British pound. Do I have one here? Euro GBP. I think I don't have. So let's put it here. EUR GBP. Okay, Euro British pounds, and we're gonna add it here. Wonderful. Okay, so look, Euro GBP, strong buy recommendation. As I was explaining on one of my videos about the trend in the market, they say, and trend is your friend, just follow the trend. And to identify a trend, you need to find at least 3 consecutive candles in a row of the same color. So as you may see, 1, 2, 3 candles in the same color of 1 hour each, 3 hours. There is a trend that market goes higher. Now, if I'm expecting to buy this now, I'm gonna go and put, let's say, uh, 5,000, which is going to be $60 to take. I'm going to put my 10% return, which is going to be $6, okay, on my investment. And I'm going to click on the buy option also, right? That's what I'm going to do. Right. That's something that we did now. So that trade open as well. Okay. So you see it's already open and it's running. So we have 1, 2, 3 trades that are running now on currencies. Why not to look at something else now? For example, some commodities. If we can look at, but we always need to customize again the timing, right? So half an hour and then hourly. Okay. And then click on apply. So here we go. So what we see here, crude oil, strong buy, Brent oil, strong buy, natural gas, strong buy. Now gold and copper sell. Right, crude oil, Brent oil. Now we already traded Brent oil, so why not to trade crude oil? Right, it's American oil versus British oil. So Brent is British, Brent, okay, and crude oil is American. Now it's a strong buy recommendation, so why not to? Okay, so that's a weird one. It's not really trading. Here we go. Now this is tradable, right? So why not to delete this one then somehow? Okay. Now crude oil and the recommendation is to buy. Okay, so we're gonna click on the buy and then look one lot 0.1. Oh, one lot here is the minimum. That's why, right? Minimum, and it's requires. You see, one lot represents 100 barrels, right? And here it's actually requires. Sorry, 1,000 barrels. 1,000 barrels it requires 3,000. I don't have that much, so let's go and trade Brent. So this one requires me to, yeah, let's say 50 barrels. This one it's you can trade in units. Now, if you put 10% again, okay, I'm gonna do it again. I'm gonna click on a buy because the recommendation is still strong buy. So I'm going to put it that way, let it run. Okay. So that's something on commodity side. How about futures? Maybe one more trade on futures. If we have something going there, let's just quickly check. All right. And half an hour. Right. And then hourly. Okay, so let's see. Now, strong sell. Dow Jones, S&P, all that is on a strong sell. Okay, now dollar index strong buy though. Okay, but the futures are down. Futures are down. So let's us go and check quickly, right? And let's say FTSE is going down. You see hourly. That's something that we're probably gonna go and trade. You see $0.257. We're gonna put sell, right? And we're gonna click on sell here, right? So again, we're using $57, right? And now we're trading. So look at this. We are using now together $300, right, out of my $1,000 that I have on my account. So I still have $745 on my free margin, so-called available funds, right? So this is my extra safety, first of all right? If the market will be moving against me, if some trades will go against me, I still have $740 for the market to go up and down in order for me to sustain that type of volatility. That's why you always need to calculate the amount of your investment versus the amount of your overall capital so that you always leave some capital on your free margin to preserve some safety. So, look, this is something that I just wanted to quickly observe with you today. So, like I said, today's Thursday, 19th of February, 2026. All right, in the markets, as we can say, there's a lot of things that happening today regarding the indices. By the way, the reason why indices going down is because of the, let's say, commodities going up, right? So uncertainty growing up. So that's why investors are actually very stressed and they are actually taking money off the, let's say, of their investments, and especially from let's say countries that involved with this possible conflict with Iran. So, like I said, this was the market overview today. Okay, and uh, And what you need to understand is that the markets are moving every day. A lot of reports are being released every day. News being obviously going every day, and politician speeches and stuff. So you need to be on top of that, so that you always know what's happening in the market, what to expect, so that your either let's say current investment that you're already running, so that you may know, okay, how to protect it in advance, or if you're about to, let's say, open your trade or invest, so that you may want to know always, okay, when is the best time, right? Maybe you want to wait until some important reports, like the report today is coming with oil. Okay, once that report will be released, then you will see the market movement up or down. Okay, and then you'll take advantage of that. So this is just observation of Thursday. I would like you to subscribe to my channel here on YouTube, and please subscribe to my Telegram channel. There I'm posting the most essential news that impact the markets, that create volatility. And volatility means not just risk, but also opportunity. Opportunity to trade, to buy the dip, to sell from the top, and so on and so forth. So I'm happy to deliver that information to you. Right? If there's any questions, if you would like to, if you'd like me to observe something else, I don't know, maybe bonds, maybe ETFs, something that you also trade or interested about, let me know in comments. And on my next, let's say, review, I'm going to add that class of assets as well. Right? So if you are just starting, let's say, your trading journey, and if you want to turn your trading into possible, let's say, a secondary or maybe even primary source of income, I provide educational Zoom sessions one-on-one, right? That you can learn about the trading, understand about it more. Okay, and I do one-on-one mentoring. So check my bio. Okay, there's all information and all the links that you want to go and check, and obviously contact me. So that's like I said, one-to-one session is free of charge. Okay, it's a good opportunity for you to talk to me face to face, to discuss your goals and needs, let's say, and I will show you the right way and explain to you what it requires. So then you will be able to understand if trading or investing is actually for you at all. Right. So this is it for today. I'm happy that we met today again. Right. So I'm gonna be coming to you, right, every single day now. Okay, with market reviews and stuff. So subscribe to me so you don't miss my next live session, and you can open some live trades with me based on opportunities that we discussed today. Thank you very much. Enjoy your day. Have a good one or evening. I don't know when you watch me.